So is alpha dead?
We don't think so. We are strong believers in alpha generation. I've been working at International Paper now for 16 plus years. We've generated a significant amount of alpha, both relative to our benchmarks and relative to our peers. We think that it is not dead. I wouldn't say it's alive and well. I would say it's probably harder today. It certainly seems harder today to generate alpha than it did when I first started in this business, and actually when I first started at IP back in '97. We have seen a gradual decline in the alpha generation over the years. We had a very strong alpha in the early 2000s. We saw it get declining slowly up until 2007, 2008, and of course 2008 was a very bad period for alpha generation. But since then we've seen it rebound strongly, and we're now back to close to the pre-2004 levels that we saw back then. Whether that continues is an open question. There are things that are going on in the institutional space, especially in the corporate space, that's making alpha obviously harder. One is the shift from equities to fixed income, long bonds, LDI strategies. That just simply makes it more difficult to find the asset classes that are rich with alpha opportunities. And I think some of the other things that are making it more difficult to generate alpha is some of the low-hanging fruit has been plucked. When I think back to the 80s and the early 90s, it wasn't uncommon that a large allocation to international equities would have given you a big leg up over your competition. High-yield bonds were still called junk bonds, and many people didn't invest in them because of that. Those were what I call cakewalks, and most of those have been pretty much picked over. And so you have to look deeper and farther to find those opportunities for alpha today.
So how do you find alpha? Tell me about your process.
Yeah, well, we think the key to alpha generation is to be very sober about your competitive advantage, to really understand where you have advantages and where you don't, and whether you can exploit them. We think we have a competitive advantage at IP, first and foremost with our governance structure. It starts there. We have a very good governance structure that has delegated a significant amount, almost all of the decision-making authority down to my office and my team. Second thing is simply being functional, as opposed to being dysfunctional. Creating a functional work environment where people have responsible jobs, a lot of accountability, where they can feel good about what they're doing and where they get along. I mean, that goes a long way to just making your work life easy. Another thing is, we think you have to be willing to take some calculated, what we call smart risks. And I think all too often, many investors don't do that. And maybe it's driven by the fact that their governance structure isn't really designed to encourage risk-taking. And then I think you have to be a patient investor. We are very patient investors. The typical holding of our managers is about 8 years. Even the managers that we've terminated have an average of roughly 8 years of service with us. So, we understand that companies like our own will go through ups and downs, and we're not going to be that quick to jettison a manager that we think is good just because they're going through a rough patch. Now, with that said, our alpha generating process, or our manager search process, actually starts before the search process. It really starts with the development of a strategy. When we look at an asset class, we ask ourselves, how efficiently priced is that asset class, and base our strategy around that.